Welcome back to U.S. Farm Report this weekend. All right, Brian, heading into these big January reports, you talked about it earlier, kind of based on what USDA did in November, what it leads you to believe that they'll make some adjustments on yield in January. But when you look at overall crop production, what are some of the things that you're really watching that could be big market movers?
Well, I think you're going to see the potential for the balance sheet to loosen up from both sides of the balance sheet. So what I mean by that is these are supply and demand balance sheets. And so I think, again, when you look at the trend of increasing yield in the November report, then translating to an increase in yield in the January report, we could very well see the supply side of the balance sheet for both corn and soybeans grow. Then you look at demand. Corn for export's been a concern. I think the trade is in the mindset we could see an additional 75 to 100 million bushels come off of corn for export. The trade's in the mindset that we could potentially see 50 million bushels come off of soybeans for export. And so what that means is that you're going to have the carryout grow in the supply and the demand side of the balance sheet. And that's going to look very bearish, especially when the fund manager is holding long positions in both markets.
Well, Tommy, as you hear Brian and what he's watching coming into these USDA reports next week, I know you're one that really advises farmers, block out some of that noise. There can be a lot of noise with these reports. So what is your advice to farmers, how to position themselves and really adjust their mindset heading into what could possibly be a big market mover?
Sure. One of the weak legs that could be kicked out from the American farmers, they do not have federal crop insurance. So as we enter January, we're going to be January and we'll establish federal crop during February. There's 2 months of extreme risk every month, of course, risky. And then we're going to come into that March planning intention. So to add on to what Brian said, the fund managers are long. There's a lot of grain on the countryside. Sure, the basis is hot, but that's because that grain is being held by strong hands. My biggest concern for the farmer is that big crops start to show up across the world. Demand tones down, the energy sector tones down, and everything goes from bullish to bearish. And if you don't believe me, look at Tesla stock. There was a point when it could only go up, and now it seems like it only go down. Look what happened to the NASDAQ stocks. Look what happened to energies. Crude oil or grains and farmland are one of the last two big winners. The most winning asset last year was farmland. I'm not so sure with interest rates high that that's going to be the case in 2023 time.
Something that Tommy had mentioned was the spring average price for crop insurance. It's not set yet. And just so the producer can understand, they do have short dated options that are March short dated. They're priced off of new crop. They will expire February 24th, which is a Friday. The 25th and 26th is a Saturday, Sunday, and then 27th and 28th is that Monday, Tuesday. So there's only 2 trading days left in the month by the time these options expire. Great tool to help hedge your spring revenue levels. Now, as far as outside markets, yes, I'm watching the equity trade. I'm looking for potential liquidity events. If we take out the recent lows there, 3,500 S&P, I think is going to be a major level. And if we take that out, that could be a problem. And I'm also watching the energies. I know Tommy had mentioned the natural gas market being less than half of its peak value, trading recently under $4. But you got to look at crude oil. You got to look at heating oil and RBOB. And if we start to really see crude oil trade sub 70, that's been a big part of the idea that grains, especially you look at soybean oil tied very closely to crude oil, and then just ethanol usage. When you see the price of energy come down, that's going to have a major impact on grains.
Wheat prices, not been pretty market action there. So what is your concern as we move through January and into February?
Well, although North Dakota is famous for growing Minneapolis spring wheat, the whole world can grow wheat, and Russia can really grow wheat. And they would like nothing more than to trash the markets and supply people with wheat. The question time last year when wheat went to 14 and we're a half off sale on that is, were we ever running out of wheat, or was the function of the market with new ETFs on the stock side manipulating or plowing into the futures? Was that really the problem? Not everyone can grow corn and beans, but everyone in the world is in the wheat business. And they became, to Brian's point about the countries down in South America, agriculture's been good and everyone's going full blown back into production agriculture. Add technology to that we're growing more bushels with less. It's a real problem for wheat moving forward.
All right, Tommy, it sounds like no matter what, as we look at this year, yes, there is this bearish tone, this sentiment, this concern, not only for this year, but the next couple of years. But as you look at volatility, and that could be the name of the game once again this year, What is your advice for farmers?
Well, that's a great question. I guess my advice would be I'd rather want to risk 15 cents on owning a call than lose the $1.50 in the physical market. Not only could they lose the $1.50 on 2022 bushels, but they could very easily lose the $1.50 on 23 bushels. I'm of the opinion that the market and the government has given the ag community a lot of money over the last few years. And I believe it's now the job of the market, interest rates, labor cost, high cost production, to extract that money back out of the ag community. We'll flash forward in a year and see if we were right.
Brian, anything you want to add to that?
Yeah, Tommy mentioned interest rates, and if you're a believer that money supply, M2 money supply has been a big part of the overall inflationary trend, I would urge you to look at a chart of M2 money supply right now, and I think you'll have some pretty strong deflationary fears if you do that.
All right, Brian, Tommy, thank you so much for joining us this weekend. We appreciate it. We'll be watching the big reports next week. All right, we need to take a quick break, and then we'll have much more right here on U.S. Farm Report this weekend.